Today, I want to discuss one of the most obvious trends in crypto, yet one I don't see many people investing in, even though we all probably know it's an absolute banging crypto vertical over the coming years. Outside of AI, this vertical is probably the number one sector that I am most interested in from an adoption perspective, and thus I think there are so many opportunities to capitalize on its growth. So in today's video, I will be breaking down exactly why I'm investing in this trend, why I think the signs are so obvious that the trend will continue to grow over the coming months and years, and I'm going to give you the best investable proxies to actually invest in the space. If you do enjoy content like this, make sure you click that subscribe button and hit that post notification bell so you don't miss a single video. Now, the trend that I want to discuss today is stablecoins. Now, some people may think, oh, Mars, stablecoins, you mean USDT, you mean USDC. Well, yes, but also no. In today's video, I don't want to focus on the stablecoins themselves, but the obvious trend behind stablecoins and the investable proxies to get exposure to the narrative. Because, I mean, just look at Tether's profits. I think they made $13 billion last year. Massive, massive profits. COINBASE also putting out huge profits with their partnership with Circle for USDC. These companies are making a killing off stablecoins, and it's becoming very clear that the growth of the stablecoin sector is only continuing. Coinbase predicts that stablecoins could reach a $3 trillion market cap over the next 5 years. For context, they're currently worth around $230 billion. So they're projecting over a 10x potentially in stablecoin growth, which would make it one of the fastest and most explosive growth sectors in crypto, driven by their utility in payments and remittances. We also know that there is a lot of regulatory change happening at the moment, and I think the US government is realizing that stablecoins are a powerful tool in their fight for global economic dominance because they want everyone to trade in the US dollar. One way that they can do this is through utilizing stablecoins. Well, you know that BRICS and many other countries have been teaming up to potentially undermine the US dollar strength. I think Trump realizes that one way to gain strength back is to solidify USD at the heart of stablecoin payments, because we know how much product market fit this use case is actually realized in crypto due to the fact that it's one of the most effective ways to transfer money across borders. I mean, if you've ever done a transaction on USDT, on Tron or Solana, or even Ethereum, you'll know how much more effective it is than doing a bank transfer, putting in your beneficiary, waiting for it to get approved, then waiting 2 days for the money to be sent overseas. That's not a very efficient system, whereas stablecoins are such an efficient system. So it's very clear why the Trump administration and Europe as well through MiCA regulation is focusing on this. So in today's video, I want to talk about how you can actually get exposure. Everyone's talking about stablecoins. The US government's talking about stablecoins. There's probably a lot of people on your feed talking about stablecoins, but how do you actually invest? Now, spoiler alert, it's not easy. The proxy bets to capitalize on the stablecoin sector growth aren't as obvious as the growth of the sector itself. However, I do think through my research over the last couple of days, I've found some very interesting plays, which I'm going to discuss today, which you can consider in terms of your own portfolios to potentially get upside to the growth of stables. So before we get into those plays, I'm going to break down the entire investable sector for you. Let's firstly discuss the trend. Clearly one of the most bullish trends in crypto. You can see here that the share of on-chain transactions, which are represented by stablecoins, continues to increase. They are, as I mentioned before, the real sector which has found product market fit in crypto. I don't think you can say many other sectors apart from payments, which include stablecoins, have actually found real product market fit. Maybe the only other use case is speculation or gambling. You know, applications like Hyperliquid, layer ones like Solana, they're mostly driven by speculation and gambling. So I would say gambling, stablecoins and payments, and maybe elements of DeFi in terms of the ability to earn yield, but even that is largely underpinned by gambling. These are the real only verticals which have reached product market fit in the space. Now, I think in the future there are other narratives which will reach product market fit. AI eventually, I think, will reach product market fit. RWA, we are already seeing the signs of that reaching product market fit. But the most obvious one is stablecoins, in my opinion. And you can see this represented by the growth that we've had over the last 5 years, going from, in 2020, a total stablecoin market cap of 5 billion to now over 230 billion and potentially 3 trillion, as COINBASE institutional research points out. And I don't even think 3 trillion is that unrealistic. I think that's also where the government is pushing things. You have the US solidifying the stablecoin strategy. You have MiCA as well in Europe, starting to put in regulations to legitimize stablecoin trading. We're seeing off the back of that a bunch of European stablecoins cropping up. We're seeing Japan getting involved with their stablecoin. We're seeing many countries trial stablecoins, and it probably won't be long until we see other major stables out of China and other major countries that want to fight with the US for market share here, because the US dollar is leading. I mean, Tether accounts for 60% alone of the total stablecoin dominance. So it's going to become a real war, in my opinion, for stablecoin dominance. But the major beneficiary of that war is actually the crypto industry. Because if everyone's fighting for who has dominance on chain, what is that doing? Well, it's bolstering the liquidity on chain. It's bolstering the total amount of dollars on chain. It's bolstering the amount of people that use stablecoins on chain. So all of this, even aside from the proxies that we're about to discuss, all of this is bullish for crypto. All of this is bullish for Bitcoin. All of this is bullish for the overall market. So if you want one thing that could take our bags higher over the next few years, it's the growth of stablecoins. But of course, we also want to invest in that itself to get exposure to it directly instead of indirectly through the broader market. We're also seeing many traditional financial payments companies like PayPal, Visa starting to integrate their own stablecoins. Obviously, BlackRock is backing stablecoin reserves. So it is a popular trend which is not only being embraced by governments, but also by major companies as well. And we also know how integral stablecoins are in the overall DeFi ecosystem. If you want to borrow and lend on chain, you need to use stables a lot of the time. If you're yield farming on chain, often use stables. If you're trading on a DEX like Hyperliquid, you use USDC, you're using stables. Pretty much everything on chain settles on stables. So, I've spoken about in the past, like Solana being the casino chip of the Sol Casino, ETH being the chip of the Ethereum Casino. Well, stablecoins are the chip of all casinos because pretty much all trading ends up settling in USDC or USDT or other stablecoins. Now, if we look at the overall landscape of stables right now, you have USDT with over 60% dominance, followed by USDC, which has been gaining dominance, but it's still only around 25%. And then you have a bunch of smaller niche ones like USDE, USDS, and DAI, and a bunch of others which account for the final 10%. But much smaller, obviously, than USDT and USDC, which make up the lion's share of dominance across the entire stablecoin market. Now, Tether made $13 billion last year, but obviously you can't invest in Tether. So what can you invest in to actually gain upside to this market? Well, that's what we're going to discuss now. Firstly, I'm going to start by discussing the broader picks and shovels. They aren't that direct, but as I said before, there aren't that many obvious options for investing. So I want to explain what some of the more indirect options are, and then we'll go more direct. But as you go more direct, you take on more risk. So just keep that in mind. The indirect ones, you're not just getting exposure to the upside of stables, but you are going to capture it with a bit less risk. And the more direct ones, you could really benefit. You could make a lot of money, but you're taking on more risk. So to begin with the first pick and shovel, it's actually Coinbase. So Coinbase established USDC with Circle, and we don't know what the exact split is, but we do know that the yield that they make on USDC, so the US dollars that they use basically on treasury yields to make interest, that's what Tether does as well. We know that the profits are split between Coinbase and Circle. And Coinbase is obviously a publicly listed company. So part of their income is attributed to the income that they make of stablecoins. Of course, when you're buying Coinbase stock, you're also taking on exposure to the overall crypto business, and you've obviously got risk from the overall crypto market and upside, obviously, during good times, but you also have exposure to the growth of USDC, which is a stablecoin which has gained a lot of dominance, especially recently with the European regulations coming out and in many cases disallowing USDT for certain use cases. USDC, which has been approved, is a major beneficiary of this, and thus Coinbase is going to be a beneficiary. They don't just make money off the yield, they also have many programs for USDC holders on chain, which allow you to earn yield. And obviously this incentivizes people to keep stables on chain, which increases overall trading volume and engagement on the platform, which can indirectly boost revenue through trading fees. So it's a bit indirect, but Coinbase is definitely a beneficiary of the growth of stables. Now, you could also argue Binance is, you can also argue Bybit is, because you need to settle with stables on the exchange, and some of them offer their own stables, and some of them also offer stablecoin pools. But I think Coinbase is the most direct out of all of them because they actually have direct upside to USDC itself and are a major player in the regulatory space in terms of stablecoins and innovating in terms of stablecoins. So obviously there are other exchanges, but they're the main one for me. Now, the other pick and shovel for the growth of stablecoins, you might not think this at first, but once you step back, you realize that they are the biggest beneficiaries in terms of the overall trend. These are the blockchains. These are the layer ones. So obviously Ethereum, Solana, and Tron being the main three with the most stablecoin volume. Yes, it's broad, but when you think about it, if stablecoin volume is going to continue to grow, if stablecoin trading is going to continue to grow, the layer ones are the biggest beneficiaries because they are taking the fees. Whenever you send money to someone on Ethereum, there are fees. That's burning ETH or Solana. On Tron, who actually have at times accounted for over 50% of the USDT supply, they're also making fees. So the major L1s, whatever L1 you think is going to be the winner, obviously the ones that have dominated in stablecoin so far are Ethereum, Solana, and Tron. These are beneficiaries, yes, indirect, but nonetheless beneficiaries of the overall growth of stablecoins. And then, as I mentioned before, if you want to get really broad, the overall crypto market is going to benefit. So either way, even if you don't invest in stablecoin protocols, you'll still make money from stablecoins growing. We all want stablecoins to grow, right? Anyone that's trading crypto is bullish on crypto. But those are some of the pick and shovels, which are a little bit more direct. Now let's get even more direct. So in this section of the video, I'll be discussing the major altcoin proxies to the stablecoin narrative. Just keep in mind that these come with more risk, because the more direct you go, the more business risk and tail risk there is for a specific protocol. However, these can also give you more upside if they end up winning. The first one, and the most obvious one in my opinion, is Athena, who have their own stablecoin USDE, which currently accounts for 2.3% of the stablecoin market. Now, for many years, there were other stablecoins like DAI, which were number 3. Frax at one point was really high, but it seems like USDE has been the one that's really risen to prominence, especially with some of the regulation surrounding USDT. And I personally know a lot of big players which are now parking a percentage of their stablecoin balance in USDE, so they continue to gain traction in the stablecoin space. Now, they have a very unique mechanism, which we'll save for another time, that backs USDE, which I'll explain in a future video. Essentially, that's a synthetic dollar, and they have delta hedged positions on staked Ethereum and short perpetual futures contracts to make money on the spread, which backs USDE itself. So they're reliant on funding rates. The protocol makes money on the funding spread. It doesn't have directional market exposure itself. So whether the market crashes or whether the market pumps, they just benefit from the difference between the two, between staked Ethereum and between the short perps contracts. It's very interesting. Obviously, in high funding environments, they make even more money. But overall, at the very core of the ecosystem, the growth of USDE is ultimately what makes them the most money, because as USDE's circulating supply grows, so does the protocol's staked revenue, and then they're able to make more money on the spread. They're also being quite aggressive in terms of their expansion, not just for the expansion of USDE, but they're also launching their own blockchain in collaboration with Securitize, so their own L1. They're doing a lot of stuff, and I think the team's really cool. Jose, and the podcast that I did with him a couple of days ago, pointed out some of the bullish functions behind ENA, and it is one of my long-term bets in terms of stables, and one that I've been adding during the recent dip, but there are technicals as well that you can play off. It's at actually a major reclaim zone at the moment. If it can reclaim, I think it's quite bullish. However, how you play it, trading long-term completely depends on you. I'll leave that up to you based on your strategy, but just want to let you know it is one that I hold in my portfolio. And I'll tell you from this list which ones I hold and which ones I want to get exposure to. So ENA, in my opinion, is probably the most obvious one just due to the traction that it's already seen. Now, obviously, another one that has historically gained traction is MakerDAO. Yes, DAI has kind of lost a bit of dominance, but it still is one of the OGs in the space, and it's still one of the proxies that I think benefits from the overall growth of the stablecoin space. They basically make money through stability fees as DAI grows, and more DAI demand can trigger more Maker buybacks and burns, which they have been doing. It's probably my favorite in terms of the dinosaur DeFi protocols in terms of getting exposure to the stablecoin narrative. Now, there are two more which I also like fundamentally. One's AAVE. It's basically a money market, the biggest borrowing lending platform in crypto. They also launched their own over-collateralized stablecoin, which is GHO. And AAVE holders benefit because demand for stablecoins drive lending fees, which obviously end up being paid out to governance holders of the AAVE token. And GHO's interest payments funnel back to the AAVE DAO. So the best way to think of it is AAVE is a proxy bet on stablecoin lending demand, which makes it a slightly different proposition from MakerDAO, which issued DAI, and Athena as well, which relies on funding rates and their unique strategy. So if you want a borrowing and lending play, AAVE is probably the number one. And then I wanted to also give you a DEX play. And I think the standout and the most obvious one is Curve Finance, which is still the home of stablecoin liquidity. It's historically had the deepest liquidity when it comes to stables, and a lot of the newer aggregators and DEXs still route through Curve's liquidity. And the Curve token itself, especially if you hold VE Curve, pays holders back with earnings from trading fees from the liquidity pools, obviously as people swap. So basically, if stablecoin volume grows, so do Curve rewards, and theoretically, so should the value accrual for the Curve token. But obviously, these plays are a little bit more indirect. You know, AAVE, it's not just a bet on stables, even though they have a stablecoin. It's a borrowing and lending platform. So you still need demand for borrowing and lending, and you still need AAVE to be the market leader in that space and no new protocol to come in. But you do also get the benefit of the fact that because it is indirect, you also have another underlying business model, which you obviously need to pay attention to. But even if stables for some reason didn't take off, it can still make money in other ways. So it can be a good thing as well. I just want you to keep that in mind. And obviously Curve is reliant on DEX volume and reliant on how deep the liquidity is to make Curve the cheapest DEX. In many cases it is, but it won't maybe always be the case. And MakerDAO, you have a little bit more risk related to the growth of DAI itself. Obviously it's the same for Athena, right? You have risk related to the growth of USDE itself. I think I prefer Athena just because the growth has been stronger. And I think the overall market is viewing it as one of the top proxies now. And you can't really fade narrative mindshare. And I think Athena has that over MakerDAO, but I still think MakerDAO is a good one. I don't hold it. I have considered adding it to my portfolio alongside AAVE, but I haven't made a decision yet. I may do it after this video. I'm just not in a rush to buy alts right now. Remember the video I did a couple of weeks ago, I talked about the sideways accumulation that I wanted to see on many alts. On coins like AAVE, coins like Maker, I would be waiting for that, and then I would definitely consider adding a position. So I'll keep you up to date if I do, but I don't think these are bad ones to hold at all long term. They're fundamentally sound, they have good fundamentals, and there's upside to the stablecoin narrative there. Now, some other major protocols that I want to point out that could also give you exposure, a Balancer, they're one of the oldest DEXs. Liquidity Protocol, LQTY, they issue LUSD, which is an ETH-backed stablecoin. They unlock liquidity for ETH stakers, and holders earn fees from loans and redemptions. You have Frax Finance. Frax growth has slowed in recent times. However, it still is one of the OG decentralized protocols offering a hybrid stablecoin. Frax is still pegged. They have a big DeFi ecosystem with lending, liquidity, staking solutions. They're still shipping a lot. So this is another one that you can consider. And then there are two more. Synthetics, which have SUSD and other synthetic assets, and Angle Protocol, which Angle is actually pretty unique because they offer Euro A and USD A. So they've really embraced the Euro stablecoin adoption, and they allow you to earn yield on these assets on the protocol itself, which I think is a cool value prop. So those are some of the major protocols. Now, there are a bunch of smaller cap ones. I didn't want to focus on that today because maybe in a future video I'll release some gems. but I wanted to present the overall sectors today. However, one thing that I would really strongly encourage you to do is keep your eye on the new launches. Because this is such a hot space, because it's very clear with Trump that stablecoin growth is going to continue, there are a lot of builders building in this space and a lot of funding going towards the stablecoin space, obviously being one of the only verticals that's reached product market fit. For that reason, there's a lot of upcoming protocols you got to keep your eye on. Here's a list. There's 7 that I've listed here: Cap Money, Perena, Resolve Labs, Noble, Level USD, Theo Network, Rings Protocol, and Sonic. These are the ones that I'm watching right now. And any way that you can get involved, either assessing their valuation on TGE, trying to airdrop farm, however you can get involved, I would consider looking into and researching these upcoming protocols, because I think there is lots of opportunity here for new protocols that launched. Athena last year was a new protocol and it ended up doing amazing, and now it's one of the top bets. If you're really interested in the stablecoin sector, what I would recommend is really just diving deep. Don't buy every coin that I mentioned today. Don't just ape anything that has a relationship to a stablecoin. Research each project, work out which ones you're individually bullish on, then come up with a plan to accumulate. There may have even been some more niche protocols, which I didn't mention today, which you find through your research, which you might end up investing in. Today's video is to point you in the direction of stablecoins are a big trend. If you haven't worked that out already, now you know, and you can start researching further into these protocols, taking some of the information from this video, and then you can also find your own plays within the sector. And I think in a couple of years' time, some of these plays are going to do really well. It's not clear what the exact winners are. Obviously, we do know crypto wins overall as stablecoins continue to grow, but it's definitely a sector worth your time in terms of research. It's the same as AI, in my opinion. Like AI, we don't know what all the winners are going to be long term, but we do know that it's going to win, and thus it's worth your time in terms of researching in the short term. If you enjoy videos like this, make sure to smash that subscribe button down below. Let me know in the comments what stablecoin proxy are you investing in? What one are you most bullish on? It can be from this video, it cannot be from this video, but let me know in the comments below. And in the future, make sure you sub, because I'll do a more like hidden gems, lower cap style video. But today I wanted to introduce you to the topic because I haven't done a deep dive on it yet. I'll see you in the next one. Have a lovely rest of your day. Peace out.